Weak guidance pulls shares of IT bellwether Wipro down sharply. The stock down 7%. Management's fourth quarter guidance suggests lower conversion of deals into revenue growth visibility versus peers. Morgan Stanley downgrades the stock, a target price at 242 rupees per share. Shares of Reliance Industries too under pressure, even as overall EBITDA for the company comes in at a 7-quarter high. Brokerages continue to maintain their upbeat stance on the counter, citing synergies from Jio and a retail-led recovery. A couple of lenders reacting to their earnings. Sharp spike in credit costs sends shares of RBL Bank in the red, deeply in the red, as in fact higher provisions dent show in the third quarter. Meanwhile, Nifty heavyweight ICICI Bank's net profit falls 4% on annualized basis. The stock under pressure too. Shares of domestic airline Interglobe Aviation higher even as the DGCA mounts a 22 crore penalty on account of the December meltdown. Warnings issued to the CEO, COO and others on account of failures. And Poonawalla FinCorp gains after the company's assets under management spiked about a 77% on a year-on-year basis. NetWeb's revenue too skyrocketed 140% in the third quarter. Shares of state-owned Coal India's unit, Bharat Coking Coal, BCCL, gets a bumper listing on the bourses after stellar subscriptions. Shares list at over 90% premium on the NSE and currently holding with a gain of 82%. Stay tuned. The management joins us in just a bit. You're watching us here on Chartbusters. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu. With me is Nigel as well. I am from the Motilal Oswal studio. Nigel joins in from the NSE. Nigel, not a particularly good day for the frontline indices. We have, the large cap heavyweights. They're weighing down on the index. Now the Nifty back to its earlier range of the lower end of the range at 25,500. Let's see where it goes. The broader market's not looking particularly good either.
Well, that's right, Mangalam. Not a good day for the markets, on the whole, but it's a great day if you got allocation in the Bharat Coking Coal IPO, because you're sitting on a whopping 80% to around 90% returns. So those investors, they are feeling very, very good. There's green on the screen. That said, I have with me Mr. Mukesh Agarwal, Director Finance of Coal India, and Mr. Sanjay Kumar Singh as well, the Director Technical, BCCL. Well, congratulations, gentlemen. What a moment, right? 70 to 80% premium on your IPO price. You all must be feeling very good.
Yeah, we are feeling very good. First of all, I will thanks to my all investors who had posed the confidence into the Coal India and its subsidiaries management. And this confidence gives a lot of confidence to me, also for my other companies which are in the pipeline for the listing.
All right, got that, Mr. Agarwal. But Mr. Singh, now the onus is on you all.
Yeah.
Because the street has, put in the money.
Yeah.
They have put in their faith. But now they'll want to see performance.
Yes.
Share price is one thing, but performance is the next. Now for this year, going by what we have seen year to date, FY26 will be a bit of a degrowth year, which is par for the course. The street has digested that.
Yeah.
But from FY27, on the base of FY26, what kind of a production growth number can you guide for? And also, in terms of washery coal as a percentage of the mix, what can it look like?
So you see, this year a little decline because of a natural reason. We had a very high unprecedented rain. It was close to 2 times of a normal rain, which badly heated BCCL operations. But that's not a worry, not an issue. Given a company which is for more than 50 years on the ground, very skilled management and skilled workforce, we will bounce back next year itself. And if you see the growth story of BCCL, we have projected 56 million ton by 2030.
Right.
And we are sticking to that. You can see those numbers tickling up from the next year onwards itself. If you see the washery, which is the main focus of BCCL growth story, currently the washing capacity is around 13.5 million ton. We are going to make it double. Double means we are going to close to 26 million ton. Last year we supplied close to 2 million ton to steel sector clean coal, which will be converted almost 5 times to 9 to 10 million ton. And this basket of product, it will fetch a good revenue to BCCL. If you see in terms of net realization, the net realization per ton of washed product sold to the different customer, to the steel, to the power and the other customer, and the net realization of a raw coal sold to the customer.
Yeah.
You see, it's almost 3 times.
3 times.
So we are going to get a very high net realization when we grow on Wasri step by step. And by 2030, we are expecting in excess of 5,000 crore EBITDA and close to 3,000 crore of PAT.
Well, that's going to be a tall ask, sir, but we'll be tracking that, 2,900 crores of PAT and 5,000 crores of EBITDA. Mr. Agarwal, I'm coming across to you. What do you think about the issue? You all could have priced it much higher, right? If there is so much demand, 147 times it got subscribed. What is your thought process from here? And now you have diluted 10%, Coal India. That temptation will be that why to wait for so long, the next 2-3 years? Might as well do it pretty quickly. How do you see that scaling down?
Number one, we had make the price as per the valuation. We had done the price, and we does not want that all the money investors should be happy. That was the principle. Coal India is always having a principle that our investor should be happy investor. For your information, please, I will just remind you that in 2010, when the Coal India IPO has come out, it was 245 rupees. Till now, Coal India has given 291.25 as a dividend, apart from the value appreciation of the share up to the 430. So this is the theory. Question of this regarding listing of other subsidiaries. We are not going to come back with the BCCL right now because we had one more company, very good company, consulting company, CMPDI, which we had already filed a DRHP in the May. We are planning to for the 10 to 15% dilution in the CMPDI.
Right.
So with this listing, we had got the encouragement, shareholders movement, and we will come with the CMPDI list.
So CMPDI, what is the total valuation as of now? Rough number that you could get for your 10 to 15% at Coal India?
I think it will be around 15,000 crore rupees will be the valuation. I am not perfect, but it is a rough,
approximately. So then another 1,500 crores approximately for Coal India.
For the 10%.
Got it. And other subsidiaries as well will be looking to list, right? BCCL you all have got done. I think MCL, SECL, you all were looking at those as well. So the next year, FY27, you see another subsidiary of Coal India getting listed?
Yeah, board has mandated for the listing of this MCL and SECL.
Yes.
And for your information, these are such a companies which is itself is having a turnover of more than 36,000 crore rupees. Their profit is around 15-16. They have profit more than a Navratna company. And their production is more than 200 million tons. So it is better that these companies should be listed so that their values can be reflected in the market in a proper way.
See, sir, everything has, two sides of the same sword, right? And the problem is, one part of the sheet says, good, there'll be listing, there'll be unlocking of value. But then, Mr. Agarwal, some part will say that Coal India effectively will become a holding company. What is the response to that?
For that, also, as you know, that the Coal India is now planning to diversify into the 3-4 areas.
Yeah.
One is the renewable energy, second is the critical mineral, and third is coal to gasification and some thermal power plants. All these companies are coming into the fold of the Coal India. So Coal India is not going to unlock the money and keep in this. We are diversifying the business because coal has also a limited life. We have to see the alternate use. And Coal India is a company where 220,000 employees are directly. And apart from that, 1 lakh is the indirect employees.
Right.
I have a big family. I have to take care. This company should be ready for the next 10 years.
Correct.
So that the people can continue to survive.
So the family is going to expand and there's going to be something for everyone is what you're telling us. Got it. Mr. Singh, coming across to you, I wanted to ask you, if washery was such a big focus area and there's so much of profitability, why we took so long to scale up the capacity? That's the first part. And the second part is we have the labor code changes that have taken place. That will have some kind of an impact, right? Could you quantify that? What could that be?
So, coming to your first question about washery, it's a very natural question. But if you see the history of BCCL, it's a 50-year-old company. We had washeries. We had big washery. We are contributing big to the steel sector. But you see, the deposition of coal is such, as we go deeper and deeper in India, the coal quality is getting inferior. So we need to modernize our washery.
Right.
So on that count, we may be a little delay, but we are right on the path. And what we are doing, we are not expanding Vasri by ourselves itself. We are going for public partnership also, and we are monetizing some of our old Vasris.
Right.
And one of such Vasri is already given to JSW. Two more are in pipeline. So seeing the growth of steel sector to 300 million ton by 2030, we need to cope up with the requirement of coking coal. So taking both the things together by ourselves and by the public participation, we are going in that direction, and we believe every ton of coal contributed from BCCL will substitute the import, and it will little step towards the Atmanirbhar Bharat.
Okay.
Number two, coming to the labor code.
Yes.
It's this labor code, I believe, it's simplification of the things. It will make the things easier for the employee as well as for the company also. And at the same time, as you see, right now we have a number close to 31,000, our own people. By 2030, we are going to 22,000. These all are going by natural retirement only.
Right.
So this will help us in spreading the fixed cost among the larger volume from 40 to 56, as well as the number is also getting reduced. So in fact, what will happen? Our fixed cost will reduce. Our variable cost will remain almost same.
Okay.
So ultimately, it will give the impact on NR. It will move on the north direction.
So you don't see it as a big impact because of the number of employees itself will be coming down from 30,000 to around 22,000. So
Yes.
you don't believe that will be a big impact.
Yes, yes.
Well, thanks a lot for giving us some color with regard to BCCL as well as what it means for Coal India. Congratulations, gentlemen. It's time for celebrations for all of you all at the family of Coal India as well as BCCL. Wishing you all the best, and we'll track you all to some of these numbers. But today, the big takeaway is BCCL has had a blockbuster listing. Well, Mangalam, that's it from me here. You heard the management of BCCL as well as Coal India. Back to you in the studio.
That point, Nigel. Well, BCCL has done extremely well for the ones who got actually the allocation here. Can't say the same for the market, though a couple of these stocks are doing extremely well. Polycab, after having fallen about 4% post its numbers, has bounced back a little bit, up around 3%. Volume data as the street was expecting. And we are seeing decent moves on CG Power, Tata Tech and Federal Bank as well. But though the mood of the market is fairly somber, what we'll do is take a short break, come back, add a little luxury to it. Maybe we have the management of Leela Palaces and Hotels. Anurag Bhatnagar, who's the CEO, joins us now. Their third quarter performance, which was fairly strong, at least on the revenue and operational side. Bottom line further boosted by lower finance costs. Anurag Bhatnagar joins us to give us an outlook into 2026. Stay with us. Welcome back. Let's get chatting with the management of Leela Palaces and Hotels. Reported a steady performance in the third quarter. Anurag Bhatnagar, who's the CEO, joins us now. Obviously, we'll be discussing the outlook for 2026, further debt reduction, overall expansion plans for a brand that has been doing extremely well, especially on the luxury side, doing almost 2.5 to 2.7 times growth than the overall luxury market in the country. Thanks a lot, Anurag, for joining in. Congratulations, a decent set of numbers that you got. Over 20% revenue growth in a seasonally strong quarter, and on an absolute basis as well. This has been your best ever quarterly performance. But the street wants more. Ye dil mange more, as they say it, right? If you could give us a sense on what the outlook for 2026 is. Obviously, the first 9 months of this year, very good. The fourth quarter likely to be even better because you have a lot of weddings and, meetings, incentives, all of that. So typically, the second half of a year, you do about 65% of the overall year's EBITDA. If I back calculate those numbers, this year you should be closer to 650 to 700 crores in terms of EBITDA. Is that a fair calculation?
Absolutely, and you're right on all counts. Second half of the year is typically much stronger, and 65% of the EBITDA comes in H2 of the year. On the back of a phenomenal, I would say the best ever quarter 3, we're looking forward to another strong quarter in Q4. Mid to high teens growth in Q4 as well, based on the guidance that we have always been given. If you look at the fourth quarter of this year, this is a quarter because of seasonality. There's a lot of inbound business coming in. And if you look on the back of what we have done in quarter three, where the growth was very broad-based, all elements of luxury ecosystem fired in quarter three, and they continue to fire in Q4. So overall, a very strong and a robust close to FY26. And like I said, our guidance, we stick to it from mid to high teens in terms of growth over the year.
Right. What's interesting is that this year will be the first full financial year post-listing. Easy pickings have been done. A lot of the debt has been reduced. The last time you joined us, you said that net debt was close to 400 crores. So if you could give us an updated number on the debt as well. And any early inkling into what FY27 looks like? Because that will also be a bridge year before all your new properties come on stream, and maybe, FY28, 29, 30 onwards, where you get a real scale up. So FY27, what should the street expect, along with what your current debt numbers are?
So we have been able to reduce our net debt today is around 800 crores.
Okay.
We have 600 odd crores on our balance sheet approximately. So we have been able to pare down our debt significantly and we continue to do so. This year, we were able to, in this first full year since our listing, actually, we've been able to sign 3 more deals to our portfolio. We've been able to complete our first international acquisition in Dubai, an extremely value-accretive acquisition. We are able to sign a very strong management contract in Jaisalmer, plus progressed in the BKC, where there's going to be a Leela Palace. So overall, with very limited use of our balance sheet, we are able to add, on a stabilized year, on an attributable basis, nearly 350 crores of EBITDA. Going forward in 2027, we expect 3 hotel openings. We expect to have a first foray into luxury branded residences opening in Mumbai. We expect the Leela Jaisalmer to open, again, exotic location. And we also expect our members-only URC clubs to open in Delhi, Chennai, and in Mumbai. So very strong and exciting year in FY27, with lots happening both on the same store as well as our new value drivers. So all the investments that we made into our portfolio in terms of food and beverage and wellness, they will all pan out in 2027, and we expect them to get stabilized.
So mid-teens sort of growth would be a fair estimate for FY27, or maybe higher than that because of the new openings, etc.?
No, absolutely. I mean, this is going to be both. We are likely to grow both same store, like to like, as well as, in addition, the value drivers that I spoke about in terms of new F&B venues, new banqueting venues, the new spa ecosystem, as well as the new addition.
And this is with margins of 49 to 50% that you've been maintaining in the past?
Absolutely, absolutely.
Right. You said your net debt number was close to 800 crores. What's the gross debt number? Because the September number that you had reported was close to around 1,460 odd crores. What is the updated number?
We're on the same numbers, so around 1,400 odd crores for gross debt.
Okay, gross debt stands at 1,400 crores. On URC itself, I wanted to understand, because this is a high margin property, right? You would have a comparable in the form of what, say, something like a Chambers does for the Indian Hotels Group. So what is your expected target revenue coming in from URC and all the other value-added services that you're speaking about? Because this proportion, while small in revenue contribution, could be higher in EBITDA contribution because of its high margin component.
No, absolutely. I mean, we have already launched the first URC by the Leela in Leela Palace, Bengaluru. The second one gets launched in New Delhi in the month of March. The third one in Chennai, and the fourth one in Mumbai by the end of the year. So this is absolutely not just a members-only club, which creates a very high networking impact for the brand and the company. It also creates a unique value proposition for all the guests, and it's extremely value accretive and high margin. So we currently have a very strong funnel of members. It's by invite only. These are the memberships that compound the value proposition of Leela across our 14 existing hotels, and is expected to contribute meaningfully to our pipeline as well. This is absolutely not just in terms of the value accretiveness, in terms of margin contribution through the fee structure, as well as the run rate membership charges that we'll have every year, but also in terms of the membership utilization through our extensive and exciting programming that we have created across all our hotels.
What about revenue from international tourists? I remember, it was around 47% in FY25. How has FY26 been? Because so far, the data that we have, the public data that we have, it's not back to pre-COVID levels. We haven't seen a massive jump in inbound tourism in the third quarter itself. Would you agree with that?
So if I talk about, see, you are partly right. I see its needle has moved, but not to the extent that one would have envisioned for the obvious reasons. If I talk about the Leela Palaces in quarter 3, our international mix in our city hotels was 57%, which was a bit short of what one would have expected in this quarter. But that gives us a long runway ahead in terms of growth. In our resorts, our international mix was 28%. Now, this international business is also very value accretive because in terms of the margins, in terms of the higher ADR, they're likely to contribute, plus the holistic spending as well as the length of stay. So we are very confident that once, in going forward in Q4 as well as the next year, we really feel a long runway ahead for the international business to catch up. And Leela is very uniquely positioned to get an outsized market share.
All right, just a final question before we let you go, Mr. Bhatnagar. You have about 9 to 10 properties which are likely to come on stream over the next 3 years. If I'm looking at Hotel Leela in 2030, if you could give us a sense on what the revenue, the EBITDA, the ADR, margins, and perhaps the number of keys that we're looking at, and if you can also throw in a revenue mix.
Fantastic. That's a very interesting question. So I'll try to keep it pointed as well. In FY30, we are looking at this point in time, let me remind you, at this point in time, we are looking at 23 operating hotels. We are expecting at over 5,100 keys. We are expecting to have an EBITDA of over 2,000 crores. We are expecting to have a very good balance of both ownership hotels as well as managed hotels. We expect to have a very wide distribution in terms of both city center hotels as well as exotic resort destinations. We expect to create new revenue streams as well through these hotels, through heritage, wildlife, skiing, resorts, and so on, as we have declared. So this is going to be very, very exciting next 3 years for us. And we are very much on track in terms of our greenfield hotels, which we are building from ground up.
All right, take that point. Wish you good luck for the next couple of years. Exciting phase for you. Let's hope, the macro tailwinds also support a sustained growth in the luxury segment, which anyway does not get severely impacted by a big dent in the macro sentiment either, but definitely positively impacted by a mild positive trend as well.
Market on the luxury side, and we are very uniquely positioned in that space. Yeah.
Take that point. Thank you. Good luck for the next full year and the financial year as well. Take a short break. Come back, get you more of the markets and a lot of stock-specific action. Welcome back. The Nifty's made a slight recovery. In fact, the recovery is led by the IT pack. So from lows of around 25,500, the Nifty is actually recovered to around 25,550. Let's see where the remainder of the day takes the frontline index. The broader market still in a deep shade of red with 2,100 stocks in the red for every 750 which are in the green. Take a short break, come back on the other side. The team of Trading R with Ritu comes up next.